Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you. That's depending on whichever part of the world you are tuning in from. I'm very excited to welcome you to another promising edition on the Extreme Speed Live. As usual, we will run through our daily routine just to confirm that we are all on the same page. So if you can see my screen, you can hear my voice loud and clear without distortion. Please let me know in the comment section by typing in hi. This will give me a sense of confidence that we are all on the same page. So please help me have this confidence that we are good to go this morning. And thank you very, very much as you do so. So I will be looking out for your comments, for your feedbacks, and then we shall be kickstarting the session. Thank you very much while I load up my comment box. All right. So what do we have here? I think I have a handful of comments from Trading Master. Good morning to you. Ganan 6, good morning. Eng 530, thank you very much. Hello, Carrie, good morning. Glad to have you around. V1313, thank you very much. And thank you for that confirmation there, Carrie. And it's on this note, I welcome you all to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from a technical standpoint using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And in fact, today promises to be an exciting one as the market is buzzing in anticipation of the CPI data coming up later today. And of course, we do know that major events like this has a way of influencing the way market participants will behave in the market ahead of this event, which obviously will reflect on the chart as price action. And what we are going to be doing today, as usual, is to sniff through the current market dynamics on the chart, looking out for patterns and structures that can help us strategically position ourselves for the next move. And in fact, I have simple trading setup prepared for us today, as we will be using it to manage our positions and of course prepare for the next move. So far this week, we have been monitoring four financial assets, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq, and of course we have the GBPUSD and the XAUUSD. And so far this week, we've done fairly well across board. So we are going to be looking at that, see how we will be managing these existing positions while we also prepare for today's trading session. And for those of you who are joining us for the first time, who are still in doubt of what is happening here, well, as technical traders, we usually gather here every day in anticipation of the New York session, where we come together as a community to engage in follow-ups and reviews of our current trading positions. This session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business, and as usual, the first exercise we normally do is to keep tabs with the fundamental factors that are likely going to be influencing the market sentiments today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information, helping us to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the asset we have been monitoring since the beginning of this week, we are focusing on economic features from both the United States and the United Kingdom economic dockets. Now, for today, Tuesday, March 12th, we have a bunch of impactful events, both high and medium impactful events to look forward to. So far today, we've already witnessed a handful of them from the United Kingdom, which includes the ILO unemployment rate, the claimant count rate, employment change, and of course the claimant count change, and finally the average earnings, including and excluding bonus, of course. And from what we can see here, from all the data we have here, all the data came in below expectation except for the claimant count change, which insinuates a not too good situation for the labor sector in the United Kingdom. And as a result of this development, we have seen how the pound sterling had dropped significantly in the last, let's say, 3, 4, 5 hours or so, as market participants reacted negatively to this event. Now, as we prepare for today, we will be looking at how the market is going. We are going to be positioning ourselves for the next move on the GBPUSD. So stay tuned in so you don't miss out on that one. Then in about 49 minutes from now, we will be looking forward to Dr. Catherine Mann, who is a member of the Monetary Policy Committee of the Bank of England. She's going to be giving a speech in 49 minutes from now. And following a woeful labor sector data, we do want to be hearing what she has to say. And of course, whatever she says here is going to be giving us an insight into the Bank of England's monetary policy stance, economic outlook, and potential future policy action, which obviously is going to significantly impact the market sentiment, as everyone will closely analyze our rhetorics for clues about the future policy direction. So this is another event we want to be looking forward to. So you want to mark out that timing so we can be on standby to capitalize on that opportunity. Then another high impactful event that we will be looking forward to today is coming in from the United States, and that is the Consumer Price Index, which is coming up in about 3 hours from now. So the Consumer Price Index is a measure that examines the average change in prices paid by consumers for goods and services in the last 1 month. And of course, a higher than expected CPI data can lead to concerns about inflation, hereby impacting the sentiment in the market, as it may prompt expectations of tighter monetary policy to control rising prices. And if you look at the data compared to what consensus are projecting here, you will see that consensus projections are a little bit lower than the previous data we are looking at. And what this simply means is that there might be the expectations of inflation gradually thinning out, just as the Fed chairman said during the testification last week, where he did projected that there is likely going to be a rate cut coming up very soon. And this, he also put a caveat to it that it will be dependent on what the economic data will be showing. So this is one event everyone will be looking forward to, considering its inflationary gauge status. We want to see what the actual data will be. And mind you, we should also take note that a strong CPI report today will probably diminish the likelihood of an immediate rate cut by the Federal Reserve, which could in turn bolster the US dollar against all the assets that is with it. So with that being said, I would like us to mark out the timing of this event. So we shall be looking forward to see how the market will be anticipating this event on the chart. So with that being said, here we will be diving right into the business, and as usual, the first asset we are going to be looking at this morning is going to be the US oil spot. And what an interesting situation we have here on this particular asset, as price action has triggered our buy positions from yesterday after capitalizing on the breakout of both the $77.40 level and the $77.50 area to capitalize on our first buy position. And of course, we did mention that we will be adding more positions at the breakout of that psychological level at the $78 area. So at this point, we have a minimum of two buy positions running in profit. So let's see, a minimum of three, so we have the first one running with about 84 pips. We have the second one running with about 76 pips. So we have a total of over 160, while the third one is currently running with about 25 pips. So with close to 190 pips in profit, we are not doing bad at all for the start of the week. And at this juncture, since price action has moved significantly well in our favor, we do want to be moving all our stop losses to secure this current position. And if you would ask me, I will be suggesting anywhere below this first ascending trend line. And please note that you want to be giving enough breathing space for price action to move around. So let's move our stop loss within the zone, and let's see how the market is going to be playing from here. Now, with this well secured position at this juncture, what is going to be our next line of action for today? How are we preparing for today's trading session? How are we going to continue seeing this momentum continue to the upside, or are there chances that sellers could come in? Now, despite having two active buy positions from yesterday's session, the potential uptick in the crude oil market appears relatively subdued. As you will see, since last week Friday, this area has been a strong barrier for buyers, as you will see. Though price has already broken out of the structure a couple of hours ago, but we can still see some sense of selling pressure exerting or negating the bullish bias at this point. And I want to consider this as could be as a result of the anticipation of the impending CPI data release from the United States. And it is expected that there will be a slight increase in February's inflation figures, while the annual index is predicted to remain very steady. Now, furthermore, we will be looking forward to the monthly market report from the key organizations such as the OPEC, the International Energy Agency, which is coming up later today, and of course the Energy Information Administration, which is coming up tomorrow. This report will provide insight into the global demand outlook. So it's very, very important, considering these factors, that we secure the current buy position, and let's see how the market will be anticipating this event. So with the way things are looking like on the 1 hour time frame, and that reminds me, especially for those of us who are joining for the first time, who missed out on yesterday's session, let's run through the higher time frame so that we can have an holistic perspective of what is going on in the market, and then you can all be on the same page with us. So our analysis for this week started on the 4 hours time frame, and this is what we saw on this chart. Now, what we did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of the month of February. And when we considered this, we were able to notice that price action has been bullish. As you will see, we had series and uniform higher highs and higher lows, giving us this beautiful ascending trend line to work with. And you know how we use our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that supports the idea of buying this asset. And to make things much easier for us, we were able to include our key level situated at the $77.50 area, which you will see here has played a major role in determining the direction of price action in the last 4, 5, 6 weeks. And you know how we use our key levels, of course. When price remains above the key level, we look out for patterns and structures that support buying opportunities. And if price remains below our key level, then we want to be selling the asset. And when you look at what has been going on since the beginning of the week, you will see that it is, let me zoom in so we can see things clearly. You will see that it has been more of price action trading above the key level, which supports the idea of looking out for buying opportunity. However, despite looking out for buying opportunity, we cannot ignore what happened here last week when we saw price break down our ascending trend line for the first time in about 5 weeks. And technically, and from a theoretical standpoint too, we expect that when price breaks down an ascending trend line like this, price may likely come back, retest the structure in an attempt to continue the downtrend. So what this simply means is that we are going to exercise patience at this juncture. We want to see how price will be reacting to the $78.50 level. In fact, we need to mark that level out, as we will be needing it to guide our decisions for today. So we have the $78.50 area, which beautifully shares a confluence with that ascending trend line we spotted here. So if price action, depending on how price reacts to this level, will determine if we are going to continue the uptrend or probably get ready for the trend continuation to the downside. So you can see we have a beautiful confluence here where, depending on what happens, will determine what next to do. So what I will be advising us to do is that as soon as price tests the $78.50 level around that ascending trend line, let's secure more buy positions from our our active positions. And depending on what happens here, so if we see something like a continued selling pressure or like a double top structure, we mark out the neckline of the double top structure or any form of reversal pattern that comes in there on our lower time frame to continue the downtrend. However, if price action breaks out and retest this confluence, then we want to feel comfortable adding more buy positions. So this is how we are going to be managing our positions today. So this area is where we shall be focusing on to see how the market would react to that structure. So I hope I made myself very clear here for those who are joining us for the first time. So let me just re-show you what things are looking like on the 1 hour time frame. So this is what we are looking at today. So let's see how the market will react to the structure. And if it so happens that price does not get back into that area, does not get into the $78.50 level, and instead we start seeing selling pressure, which has been peculiar with the structure since last week Friday. You see selling pressure here, selling pressure, and though we have a breakout price, we still have a shooting star candle here, which it's a good sign that sellers are still present in the market. So if this selling pressure persists, maybe then we will be looking for price to break down the ascending trend line here on the 1 hour time frame to give us an opportunity to sell. Then we could be thinking of adding more sell positions to the $77.50 level and the $76.80 area to maximize the bearish move. So our center of focus today is basically going to be between the $78 area, this level, this zone here, and the $77.50 area, where depending on the breakout, will determine where we will be going. But at this point, we still maintain a bullish bias in this market, so we're still looking out for more opportunities to buy here. But what I'm saying is that if this ascending trend line get broken to the downside, then we can start considering selling this asset today. So this is my simple view on the US All Spots. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5, 10, 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. You can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decision. And please do not forget to mark out these trend lines. They are very, very important, as we will be using it to guide this bullish momentum. So as long as price remains above it, we remain confident in our buy position. So that is my view here. Let's see if we have any questions, and then we will be going into the next asset. Stay tuned in, guys. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset we are looking at this morning is going to be the USTech100, and in fact, since the beginning of this week, it is quite clear that the market has been consolidating, giving us an insight into the uncertainty going on in this market. And this, of course, has led into sell positions at the beginning of the week. Remember, we had our sell stop order right below the structure, which was triggered, actually giving us about 78, 85 pips thereabout before the bullish momentum came in. And I do hope you moved your stop losses accordingly to secure the position. And then we saw price action come back again to trigger the sell position, but this time around did not do very well, as we get stopped out in a loss on that sell position. And with our buy stop order sitting above the resistance line here, we had a buy position triggered, which is currently struggling. And at this point, price is currently running with a break-even status at this point, and we hope that price will give us something significant to work on today. And so with the situation we have here, it's still more of a range-bound trading activity. Remember, yesterday we confirmed this range-bound, as we saw price confined within the $18,040 level and the $17,950. Now this old range has expanded into the lowest point for this week here, which is going to be marked at the $17,880 level. So this is the lowest point where price action has been for this week, and of course we have a wider range right now. So I will just take this one out and let's extend this a little further, and let's see how the market is going to be reacting to the structure. And before I give you an insight into what things are looking like here on the 1 hour time frame, I want us to take a quick look at the higher time frame so that we can have an holistic perspective into what is going on there, and of course use that information in conjunction with what we have on our lower time frame to make an informed trading decisions. So our first point of contact at the beginning of the week was on the daily time frame, where we took into consideration the character of price action since the month of October of last year. And what we were able to find here is a bullish momentum, which of course has consistently found higher highs and higher lows. And when we connected the series of higher lows here, we have a beautiful ascending trend line to work with. And you know how we use our ascending trend lines. As long as price remains above the trend line, we obviously want to be looking out for patterns and structures that support buying opportunity. Now, zooming into the structure, you will see that in the last 4 to 5 weeks, the market has been consolidating, and we saw price break out of our key level, which is the 17,950 for the first time last week. And then we saw the situation as at last week trading session, we were anticipating a retest of the structure with an attempt to continue the uptrend. Now, with the situation we have, look at what has been going on here since last week Tuesday. You can see how it has become difficult for sellers to break through this area, as every attempt by the sellers to break through has always met with strong resistance from the buyers. And one beautiful thing about this development is the fact that this rejection shares a beautiful confluence with that ascending trend line. Now, since price is still floating above this ascending trend line and the key level at the 17,950, it makes a lot of sense that we look out for patterns and structures that support the idea of buying, and we are not going to be considering selling unless we see a breakdown retest of this confluence to the downside. So you can see we are at a crucial juncture in this market where, depending on how market participant reacts to this confluence, will determine what we are going to be doing next. Now, with this information we've gathered here on the 4 hours time frame, scaling down into the 1 hour time frame, you begin to see things more clearly. And what I'm seeing here is more or less looking like a reversal setup. If you look at this closely, following the impulsive bearish move that brought us to this point, you will see something like an inverse head and shoulder pattern, which is not has not really formed, as we're yet to see the right shoulder, where the breakout of that $18,040 level, which is our resistance line for that range, will also be doubling as our neckline for this reversal pattern. So buying above the structure makes a lot of sense. And secondly, above the $18,040 area, if price is above the structure, price will be back above that ascending trend line we identified on the higher time frame. So if price climbs back above the 18,040, we feel comfortable in our buy position. And like I said earlier, we already have a buy position triggered, and for those who are yet to capitalize on this opportunity, you can as well have your buy stop order above the 18,040, as this area could be considered a buyer's territory. And then we can look out for more opportunities to buy at the breakout of the 18,135 level. So this is how we are going to be positioning ourselves for any buying opportunities in this market. Now, in as much as we are looking out for buying opportunities, we cannot ignore the potentials that sellers can also come in at any point in time. Remember, during the second half of last week, it was more of selling opportunities, as we saw that impulsive move that brought price into that lowest point at the 17,880. Now, secondly, we are at an all-time high zone, And usually when we find ourselves in an all-time area, the emotions that drive market activities around this zone is more of a fearful one, as those who are capitalize on this bullish opportunity out of fear may want to be closing in some of their positions with the hopes that price may crash from that area, since price is yet to this is a new territory for traders in this market, and this could lead into retracement move, choppy market conditions, and of course price nose dive into the downside. So those possibilities are also open, and in that regard, if we are going to be considering selling, what are the structures we want to see on this chart to make us feel comfortable selling? If you would ask me, I would rather want to see price action break down this this lowest point for this week, which is the 17,880, before joining any bearish move to the downside. And if we are lucky to see a convincing series of lower highs and lower lows right on our lower time frame, breaking through the key level at the 17,950, we could join early enough. But depending, that is subject to what happens in the next couple of hours. But to be more precise, we have a stop loss right below the 17,880 to capitalize on the bearish move. And if we are lucky enough to see some series of lower lows and lower highs on our 1 hour, on our 15 minutes time frame, then we could join early enough. So this is our decisions for today. As you will see, our center of focus for today is between the 18,040 and the 17,880 area, where depending on the direction of the breakout will give us an idea of where we are going for today. So I encourage us all to mark out these levels, as we will be needing them as a reference point to guide our independent trading decisions today. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I will be taking the next 10-15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart. All right, so in the absence of no questions, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD. And what a phenomenal 24 hours we've had here, as we have about 3 sell positions running in profit right now. And before we go into any details, and due to the buy pressure we're noticing so far, I think it is appropriate and essential for us to safeguard all the current sell positions, as GBP USD is encountering some bullish buy pressure at this point in time. And if you would ask me, I suggest that anywhere above the 1.2800 area seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. So the worst case scenario for the third sell position will be at break even if this area gets hit at any point in time, while the other 2 sell positions will be in profit. And for those who capitalize on this opportunity, well done and kudos to you. And for the sake of those who missed out on yesterday's session, let's run through, and for educational purposes as well, let's run through what really happened at the beginning of the week right here on the 1 hour time frame, and what led to the decisions that we made to sell this asset. So the first thing we observed at the beginning of the week was a range-bound trading activity where price was confined within the 1.28650 level and the 1.28450 area to emphasize the prevailing uncertainty in this particular market. And usually whenever we have a range-bound structure like this, we know that there is an indecision going on. Hence, we want to exercise patience and wait for the market to make a decision by breaking out of the resistant line of the range to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. Now, with the situation we did saw how price broke down the support line here yesterday, and I did emphasize during our session that for those of us who missed out, we want to be looking at a retest of structure to join that decline to the downside. And since yesterday, you can see how price has nosedived. We had a second sell position triggered at the 1.28250, and the third one had the 1.2800 area, giving us 3 sell positions active at this point. Congratulations to everyone who capitalized on this. So, like I said earlier, secure all buy positions right now as we begin to notice some bullish pressure appear from this area. Now, the renewed selling pressure we are witnessing on the GBPUSD may be considered to be a retracement phase or a shift in risk sentiment, which is benefiting the US dollar. And according to the recent reports we saw from the United Kingdom this morning, we saw how the figures were not that rosy, giving further support in the bearish momentum we are seeing here. Now, currently, the path of least resistance appears to be downwards as market participants await the release of the US Consumer Price Index data coming up later today, which is expected to provide fresh impetus into this market. So with this in mind, and with these recent developments, and with a well-secured position at this juncture, how are we trading the GBPUSD for today? Now, before we go into that detail, let's run through the daily time frame quickly. Let's see what is going on from an holistic standpoint. Now, if you remember vividly, yesterday we took into consideration the character of price action since the month of June of last year, where the first thing we noted on this chart was that key level had that psychological area of the 1.2800 area. And of course, I emphasize how crucial this key level is, as it has played a major role in determining the direction of price action in the last 7 to 8 months. As you will see, we saw how this area was a selling niche at some point before we saw price broke out of the structure, and when price broke back down At the beginning of the month of August of last year, we saw how the 1.28 area had been a strong selling niche in this market. As you will see, every attempt by the buyers to break out of the structure was met with strong resistance from the sellers, and not until last week we saw how price finally broke out of that structure. And at the beginning of this week, we were considering if this breakout will be a true breakout or a valid one. So if it's a true breakout, we want to be seeing a retest of structure in an attempt to continue the uptrend. And if it's going to be a false breakout, then we may likely see price drop below that key level, and selling pressure below that area will further emphasize selling opportunities. Now, in addition to this key level are a couple of trend lines, one of which supported the bearish buyers. As you will see, after connecting the series of lower highs, we have this descending trend line. And since the month of October last year, when we connected the series of higher lows, we have an ascending trend line, which of course has supported the bullish momentum, leading to the breakout of that descending trend line we have there. And from a theoretical and technical standpoint, when price breaks out of a structure like this, we expect that some point in time price may come back to retest the structure, which interestingly shares a confluence with both the ascending, the descending, and of course the 1.264 area to incite another uptrend continuation. Now, if we look at the distance from the key level to this area, we are looking at around 150 pips, and remember, we're currently in a sell position. Now the question now is, how far will this bearish momentum go? Is it going to come and retest the structure in an attempt to continue the uptrend, or are we going to be seeing an outright sell-off if this confluence is broken to the downside? Or in fact, we may likely be seeing buy pressure resume above the 1.28 to incite an uptrend continuation. So you can see how crucial this juncture is, and we want to see how the market participants are currently reacting to this key level at the 1.28 to position ourselves strategically for the next big move. Now, with the information we have gathered here on the daily time frame, let's scale back down into the 1 hour time frame, where our center of focus is going to be around the 1.2800 area. Now, this morning, while I was trying to decipher the next short-term trading opportunities on this chart on the 1 hour time frame, I was able to acknowledge the series of lower highs going on in this market since the week began. And if you do that correctly, connecting the series of lower highs, so I have a couple of descending trend lines to work with today. So we have the first one right here, and then we have the second one right here. So what we are going to be, you know how we use our descending trend lines, of course. As long as price remains below that descending trend line, we obviously going to be looking out for patterns and structures that support the idea of selling the asset. So, and like I said earlier, move your stop losses, secure all these current sell positions, as we may likely see a situation where price comes back to retest this descending trend line in an attempt to continue the downtrend. And in fact, if it gets broken to the upside, we still have a descending trend line here that could incite a bearish momentum if selling pressure persists below that particular structure. So I'm not going to be considering buying here yet, but continue to monitor price action as we look forward to see how far this bearish momentum will go. Now, in order to maximize the bearish move, that is if price continues to find lower highs, so we are going to be identifying the 1.27, hold on a second, 1.27760 level, where we shall be adding more sell position if price action continues the downtrend. So this is the lowest point here for this week. So now what we are going to be doing now is to please remember, we said we move our stop losses, secure the current sell position. Let's see how this buy pressure was going to fare today. Will it come to the 1.28 to retest it to the downside, or is it this trend line to the downside, or this one to the downside? So let's see what will happen today. And everything is still looking very bearish at this point in time, so we still hold on to a bearish bias. However, in as much as we're looking out for selling opportunities, the only condition that will make us consider buying this asset is for these descending trend lines to be broken to the upside. And in fact, if price action breaks out of the descending trend line, then we will be back within the bias territory. Remember, this is the resistant line of that ascending channel we identified on the 4 hours time frame. Let me show you quickly so that we can all be on the same page. So yesterday we saw this resistant line of that ascending channel, which was broken yesterday, as you will see here. So if price action climbs back above this area, then we will be looking out for more opportunities to buy. However, I still consider that we could buy even before the breakout of this resistance line happens, and the only condition that can make us buy is to see a reversal pattern here. So we are going to be looking out for any form of reversal pattern. It could be a double bottom structure, an inverse head and shoulder, a falling wedge, whichever case it may be. We mark out the neckline and then buy the breakout of the neckline, after which we will now watch to see how the market will be reacting to the resistance line of that ascending channel. So this is how we are going to be managing our positions on the GBPUSD for today. So let's see how the market is going to play out today. So please let me do a quick summary of what I said here. Now, if we are going to consider buying here, we want to see any form of reversal pattern, double bottom structure, head and shoulder pattern, whichever case it may be, breakout, retest of the neckline, boom, we are buying. However, if price does not do this and instead it just moves all the way up, we are not buying unless this trend line is broken to the upside. Okay, so that's the conditions we are looking at to buy. Now selling, if we are selling, we are looking at the lowest point here to add more sell position if price action ever breaks down the structure, or we could be seeing price retrace itself back into the trend line. And if it does, we shall look out for continued selling pressure. That is, buyers finding it difficult to break out of that descending trend line will be a good signal to join the downtrend. And if it got breaking, we have another descending trend line here where continued selling pressure is still going to push price to the downside. So this is my simple view on this asset for today. So I encourage us all to mark out these levels, and let's ensure that we mark out the levels and key level. Ensure you have your stop losses on the current sell positions we have as we continue to monitor price action. If you have any questions whatsoever, feel free to let me know in the comment section. Okay, we'll be taking the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. So I see you, Fuad. Good morning. Drakosh, Bronca 4, and Giovanni 6127. Good morning to you guys, and glad to have you around with us this morning. So, in the absence of no questions, then we will be moving on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, yes, the last 24 hours has been a little bit indecisive, as you will see. Ahead of the release of the US consumer inflation figures, we are witnessing some repositioning trades, which is obviously exerting pressure on gold prices, leading to that situation where price action triggered our stop loss order to record our first loss for this week. So yesterday we had this range bound identified where we saw price action confined within the $2,189.50 level and the $2,175 area to emphasize the prevailing uncertainty in the market at that point. Yesterday the support line was at 2177. I can still remember it was around here. I had to extend it when the consolidation expanded. So right now we readjusted it to the 2175. So you can do the same on your own charts too as well. And during our live session, when we notice how it has become difficult for sellers to continue, as we kept on seeing sharp rejection of this zone, we decided to consider buying, especially after taking into consideration the bullish momentum in this market. So we decided to have a buy stop order above the 2182, which obviously got triggered but did not do very well as it went to eat our stop losses this morning. But it's okay. It's still the second day of the week, and we still have enough room to recover the losses we incurred so far, and of course make some significant profit on top of it. And thank goodness we have series of high impactful event coming up later this week, which will be bringing some fresh impetus into this market. Now, as it is, gold is currently displaying signs of decline while maintaining this consolidative trend, and this could be attributed to a temporary halt in the US dollar's downward movement coupled with stable US Treasury bond yields. And we know how correlated the US Treasury bond yield is with the US dollar. Considering these factors, it is advisable to keep our bearish bias open. The possibility is still very high, considering the fact that we are at an all-time high zone where the tendency of a crash is likely going to happen due to the fear of market crashing. That's an obvious thing. And the other thing is profit-taking activities for those who had capitalized on that strong bullish momentum. So as it is right now, market participants seems to be reducing their bullish positions in anticipation of the US consumer inflation data, and of course these figures will influence the Federal Reserve's policy decision and could provide a new direction for gold prices. And please note that a higher than expected CPI report today might reduce the chances of an immediate rate cut by the Federal Reserve, potentially strengthening the US dollar and creating challenges for safe haven assets such as the gold. Now, with the understanding behind the scenes of what is going on and driving the market sentiment, let's look at things from a technical standpoint, especially starting from the higher time frame. Now, scaling back up into the daily time frame, remember this is what we saw at the beginning of the week after taking into consideration the character of price action since the month of August of last year. And what we were able to come up with here is an ascending channel which buttresses the strength of the bias. Now you see, when we connected the series of higher highs, we have the resistant line of this ascending channel, and when we connected the series of higher lows, we have the support line of the ascending channel, while we also have an imaginal line, trend line, within the resistance and support line of this ascending channel. So it's more or less a bullish trend at this point. And we also acknowledge a couple of more levels here. The first one here is the $2,080 area. Remember, this was our key level for last week, which guided that bullish opportunity we took advantage of as we saw price broke out of the structure right here last week trading session. Now we added another level here which was serving as our key level for this week, and that is the $2,143.50 level. And the reason why we use this level is simply because of how this area was serving as a selling niche sometime in December, and we saw price break out of that structure last week. Now the question at the beginning of the week is, are we going to see price come back to retest the structure in an attempt to continue the uptrend? Or is price going to come back into the $2,080 level to retest the structure in an attempt to continue the uptrend? And if we look at the distance between where price action is right now and the first level, that's about 350 pips, which is something we want to capitalize on if it so happens. And we are looking at a maximum of about 960 pips if price goes that far, and over 1,000 pips if price will come into the support line of that ascending channel. So these are one of the scenarios we were looking out for at the beginning of the week, and we were also trying to see how the market participant will react to this all-time high to decide if this bearish move is what we are going to be seeing today, this week, or we will likely see an uptrend continuation. Now, to have a better idea into what is going on around this all-time high zone, we will scale down into the 1 hour time frame, and there was where we identified that range bound trading activity, as you will see here. Now, if we take a closer look at the structure after considering the last couple of weeks, remember that we identified this ascending trend line which appeared to have been broken in the last 24 hours, and for price continue to trade below this ascending trend line is a sign that we may likely see a bearish move. So what this simply means is that the whole range bound structure here has a potential of transitioning into both an uptrend continuation pattern or a reversal pattern. So selling below the 2,175 area will make a lot of sense at this point to capitalize on that bearish move, and we are looking at that key level or the 2,140 that we identified on the daily time frame. Let me show you one more time. So we are looking at TP target at 214,350 or the 2,080 area, which dovetailed to between 350 to over 1,000 pips if price continues that trend to the downside. So let me go back to the 1 hour time frame. So here we are. So I encourage us all to mark out this range bound structure, as we will be needing it to guide our trading decision. So we are looking out for selling opportunities below that support line. However, if price action continues to find buy pressure around this area, I wouldn't consider buying unless price action takes out the highest point here at the $2,189.50 level. And I'm beginning to consider some I'm not sure how that is going to play out here. We have a trend line, we have something around this area. So if we bring back our candle chart, and if it so happens that price breaks out of the 2182, I would not be having a buy stop order in this case, because I don't want to repeat this this situation we had yesterday. So what I will do instead is wait for the breakout happen. Once we see the breakout go into the lower time frame, once we see a retest of structure coupled with buy pressure from that area, then we can now join that uptrend move to the downside, leading to the trigger of our buy stop order at the breakout of the $2,189.50 level. So this is how we are going to be managing our positions for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. And to make things easy for the high to capture the next move, also emphasize that between the 2,182 and the $2,175 level is that area we will be focusing on today. So depending on the direction of the breakout will determine where we shall be going. A breakout of the 2,182, remember what I said I want to see a retest of structure before jumping into that position. But if you had if you can afford to risk a minimum percentage of your account, you can place a buy stop order above that structure. And if price breaks down the 2,175, we are looking out for selling opportunities. So this is my simple view here. It's a simple trading setup. Let's see how the market will play out with the structure, and we shall be on standby to capitalize on the next move. So I hope I made myself clear on this one. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we finally round off on today's trading activity. Sorry, Extreme Speed Live technical analysis session. So I wait for your questions. If you have any, drop them. Good morning, Helmi Osomi. Good day to you, Stoned. Hello, Hinis84. How are you doing today? Glad to have you around with us. Frido Mipix, good morning. Jenny Ho, good morning to you too. All right, so in the absence of no questions, I think we have come to the end of today's Extreme Speed Live technical analysis session, as we were able to successfully run through all of the financial assets on our watch list for this week, which includes the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD. And of course, we were able to identify simple trading setup that we will be using to strategically position ourselves for the next move. And I do hope you are able to mark out these levels accordingly on your chart, as we have illustrated during the course of the session. If you have done so, well done to you. So all we need to do now is exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And so with this in mind, please ensure that you have a well-defined risk management strategy in place to mitigate against any risk on your portfolio. And for those of you who are joining us for the first time, I do hope you are able to get one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions. So it's on this note I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.